Alright, this video is going over market structure, just an amplified lecture on kind of my previous video. So what we're looking at here is a 15-minute chart on the NASDAQ. So the key things to take away is time. That I didn't mention is time is the most important thing. It's always time then price. The reason that is because time is really the only constant that we have. Price is always moving, but if we can narrow down certain times of the day and get characteristics and profiles of different time segments, then we can really get dialed in. So what I've got pulled up here is a 15-minute chart, NASDAQ. Pretend this is from that swing high to that swing low. Pretend the rest of this is not here for now. So this is how I would draw an impulse if I was trading the US Open. I would go from this swing high to this swing low. Then anything up here you want to sell at a premium, buy in a discount. Since we're inverting all these fair value gaps and we've been super bearish, if we go to the weekly and the daily, we've been going straight down. Same for the daily. We hit this fair value gap, boom, down. So I always want to follow the higher time frame. Sometimes I just go on the hour or the 15-minute, whatever you want to do, but always have a higher time frame narrative with what you're doing. But the key points I want to do is, I know I went over them, but it's manipulation versus displacement. As you can see, this 15-minute, we just manipulated this high. We didn't even close above it. So I would not think we are going to continue because we manipulated it. We displaced through these swing lows, like this swing low. We displaced this swing low. So we're displacing through lows. So I'm thinking on this scenario we're going to be continuing. So we have a fair value gap in here. 1, 2, 3 right here. And I know that's a pretty wide stop, but you can put it above this third candle if you want. However, you may have to size down on something like this, or you can as it starts going in your favor, you can trail stops pretty aggressively. But this is just an example that I picked out for manipulation versus displacement. See, we're manipulating highs, we're displacing through lows, we're finding the PD arrays, that's inside this, and we're trading off that. So you have to know how to draw impulses or your dealing range. So with swing high to swing low, you would map that out to give your premium and discount for that range. We're manipulating highs, we're displacing through lows, so we should be continuing to the downside. Time, what time is this? This is New York Open. So price can do things whenever, but when you have time and price aligned, your probability is going to go way up. So just say you didn't catch that move, and you're in the PM silver bullet. So we've got a swing point here. We can move this down, move this up a little. Let's go move it all together. Sorry, I'm not too good with this. We'll just make a new one real quick. Alright, say you got on the charts in the PM session and you saw, okay, even though we've got a swing point there, most recent swing high is going to be there, and say you got this. And also what you got to keep in mind is you have to look back left. Another thing about time is time-based liquidity. right here, Asia low, London low. We manipulate highs, so we want to target this Asia low, and then right here is a fair value gap. So if we're on the sell side of the curve, we know that price is going to run quick through this area, which it did, through this area, which it did, and if you keep looking, you've got yesterday's lows still intact here. So we went aggressive through all that. So that's just part of building narrative, is building buys for the day. Okay, we're manipulating highs, we're displacing through lows. We look left, we have our time-based liquidity here and here, and we've got fair value gaps underneath it, so price should rip right through it, and we have yesterday's low down here still intact. So as you can see, price went through there, but say you got on the PM session, you drew this impulse out, swing high, swing low, it comes right up to the 50% mark and then sells off. So it's always gonna, especially when the market's real weak, it's always going to come back to fair value. Not always, but a lot of times it's going to come back when it retraces to that 50% level. I kind of like it to come a little further, but when you've got a fair value gap, you could put it, as soon as you entered in it, you could put your stop above this candle, the second candle. Same thing here. You could put 1, 2, 3. You put your stop above the second candle. You'd have been safe on a 15-minute. I really don't trade the 15-minute. This is just purely for examples on how to draw your dealing ranges or your impulses. Swing high to swing low to find your premium and discount. And whatever time frame that you trade on, that's what you want to draw your impulses. So on a 1 minute it'll look different on a 15, but just kind of wanted to give you some another example, letting you know that time is the most important thing. As you can see, open. Okay, what time are we in this fair value gap? 2:30. From 2 to 3, what happens? Silver bullet. Okay, this is a silver bullet trade targeting what? Yesterday's low. We took it out. So that's how I build narrative to give me a trade idea. Then I use time, then see what price is doing. So I'm getting on the chart, I'm looking at the weekly, the daily, we're going down. Okay, got that. I marked out time-based liquidity levels. We got Asia low here, we've already took out the high, and then we've got yesterday's low down here. So I'm like, okay, I got some targets to the downside, let's see if we can get a trade. And that's how we do it. Time is going to be your most important thing. That is for me. I trade only one time of the day. That's Asia between 650 and 710, or 750 to 810, or sometimes 850 to 910, the macros. And I've been successful with it just due to work. If I didn't have to work, I would trade the New York session. I would trade a lot smaller size and have a lot wider stops. And then scale in more because New York moves so fast. But just understanding manipulation versus displacement and drawing correct impulses, giving yourself a dealing range to find premium and discount, but first find a narrative. Why should price go down? Okay, we've got time-based liquidity here, yesterday's lows here, we're manipulating highs, we're displacing through lows, so we should continue to our sell side targets. So I hope this helps you, kind of gives you another video on how I look at market structure, how I build narrative for a session. I don't really worry about daily buys. When I get on the charts, I kind of see what's already happened, what's going on, and whatever happens on the sell, like the buy side of the curve, when you start going down, the sell side is going to operate a lot of the same. Like these fair value gaps, when they get inverted, as you can see, they go through them real quick. Time-based liquidity levels, they go through them real quick. Yesterday's low, we displaced through it real quick. So hope this helps. I appreciate you. God bless you. And till next time, good luck trading. And I appreciate everybody's prayers, for everything that's going on. Thank you.